SuperTrend is a very versatile indicator. It can be used in multiple ways. You can use it inside a strategy as a stop loss or a profit target, or as a signal to enter and exit, or as a filter for another signal. And in this video, I will show you how to build a strategy using SuperTrend as a signal. The indicator equation is very simple, and it's very close to Keltner Channel. So for the upper band, we use this average and add a multiplier of an ATR. So in this case, we have two variables. It is the ATR lookback and the multiplier. And then same thing for the lower band. So it's the same average, but this time we deduct the multiplier times the ATR. So it's the same equation for Keltner Channel, but Keltner Channel uses the exponential moving average instead of the high plus low divided by 2. The other difference from Keltner Channel is the drawing. This is the chart of the NASDAQ 100 futures represented by NQ.D, which is the daily session. And the indicator plotted is the SuperTrend Indicator. So like I mentioned, it has two channels, the upper channel, which is in red, the lower channel, which is in green. And notably, we can see the difference from the Keltner Channel because we are plotting only one at a time. So when the price closes above the upper channel, we draw the lower band. And when the price closes below the lower channel, we draw the upper band. Another difference is we only draw the lower channel when we get a higher high. So you see, once we don't get a higher high, we are flat. So again, here we are flat. Again, here we are flat. Same thing when we are trending down. You see, when we don't make lower low, we are flat. Both of these characteristics make the SuperTrend indicator unique. So when the trend is up, it always follows the trend and have a flat area if we don't make a higher high. And when we are trending down, it's always going down and we have a flat area when we don't make a lower low. And that's why we are drawing one band at a time. So now that we understand how SuperTrend works, we can easily build a strategy using the SuperTrend signal. And the signal will be when the indicator flips from up to down and from down to up. And since I am testing this on the NASDAQ 100, NASDAQ being one of the indexes in the US, it tends to drift up most of the time. So we will not use it to build a short strategy. We will only use the long side. So our strategy will go long whenever this channel flips from red to green. Basically, whenever the price closes above the upper channel. And here is the strategy applied. So you can see whenever we flip, we buy the next bar. And whenever we flip on the opposite side, we sell the next bar. And we are going long only using a single contract. And these are the results of the strategy: 125 trades with about 50% win rate and a huge average trade. Our return to drawdown is 2.7. And this is our periodical analysis. Now, of course, we can optimize this. So we can optimize the length of the ATR from 5 to 30, step 5, and the multiplier from 1 to 15, step 1. So overall 90 combinations. And this is the result of the optimization sorted by return to drawdown. And we see at the top, the length is 30, 20, and then a couple of 5, 25. So it's all over the place. And this is the 3D representation. So we can see this area is probably stable. So between 10 and 12 on the ATR multiplier and 20 to 30 of the length. Now we can see here the problem is the low number of trades. Very few strategies have higher than 100. So this one, which is the length of the ATR is 5 and the multiplier is 2, which makes sense because that means we are the channel will be very close to the price, so we get more trades. And if I sort by the multiplier, you can see this is number 2 and all of them producing high number of trades. Now this is totally different than 1. So 1 producing more trades, but you can see the results for the 1 multiplier, they're all losing money. So it's a huge jump between 1 and 2, where 2 all of them making a lot of money. Now, just like a moving average, we can use a longer length period for the ATR and use it with the short period. So imagine just like the 50-day moving average and the 200-day moving average. So in this case, we can use 2 and 10 as our entry signal, while we have a longer ATR period also on the long side. And this is how it looks like on the chart. So the bright green and red, this is our short length ATR and multiplier. And then the dark green and dark red is the longer version. And you can see in this case, this signal will not be taken because this one is in an uptrend, but the longer version is in a downtrend. So here is our strategy with the two SuperTrend indicators. So one is fast and one is slow. And we are optimizing the fast one the same as before. So from 5 to 30, the length in step of 5, the multiplier 1 to 15, step 1. And then the slow length SuperTrend will be the ATR look back is from 40 to 100, step 10. And the multiplier from 4 to 14, step 2. All in all, we have about 3,700 strategies. This is the result of the optimization, and we can see now we have 4 variables, and this will be hard to see in a 3D graph because the y-axis is the net profit, and then x and y is 2 variables, and then this is the third, but we're still missing the fourth. So you can overcome this by removing one of the variables, and it's very easy to remove one of the variables in this case. We can just say that whenever we optimize the length of the short SuperTrend indicator, we use the same value times 3 for the long SuperTrend indicator. So as you can see now, we have 3 variables to optimize. So the fast length of the ATR, same, 5 to 30. The fast length ATR multiplier, 1 to 15, that's the same. And now our slow length is always 3 times this value. So when this is 5, the slow length will be 15. When this is 10, the slow length will be 30, and so on and so forth. And then the slow ATR multiplier is the third variable. So now overall we have 540 combinations. And this is the result. And as you can see, we have 3 variables. So very easy, we can represent that. So you see now, this is the fast ATR multiple, and this is the fast ATR length, and the slow length is 3 times this value, and the z-axis, of course, is the net profit. And now this is our third variable. So we can see 4, 6, 8, 10, and all of them, look at this, all of them are very, very stable. Going back to the spreadsheets, we can see again we have a problem of trades. So this one is 100 trade. So if we filter for 100 trades and $100 on average per trade, we end up with only 16 strategies. So this is the top strategy. The ATR length for the fast SuperTrend indicator is 10, the multiplier is 2, and the slow SuperTrend indicator has a length of 3 times this, so it's 30, and then the multiplier is 4. So this is the result of the strategy, 191,000, 5 to 1 return to drawdown. And this is the curve. But as you can see, we have only 100 trades. Now we can easily overcome the drawback of the low number of trades by switching to a lower time frame. Because with a lower time frame, of course, we will get more signals. And then we can easily filter the extra signals out. So let's try the strategy on the same market, but we will switch to 60 minutes time frame. So now we are on the same market, the Nasdaq 100 futures, but now we are using the 1 hour time frame. And again, we have the 2 SuperTrend indicator. So I will optimize the fast and slow SuperTrend indicators with the settings that gives us in total 2,700 combinations. And this is the result of the optimization. So out of 2,700 strategies, we have about 50% of the strategies that has more than 100 trades and more than $100 on average per trade. And as you can see, the difference is huge when we switch to intraday. So look at all these number of trades. They are 500, 400, 1,000. So on the daily, we were barely making 100 trades, and here we have so many. And the advantage here is we can easily now add a filter to enhance our strategy. Now let me pick this strategy. So this is 15, 7, 70, 60, about 642 trades with a really good average for the NASDAQ, 348. So this is our strategy performance, 223 with 5.1 return to drawdown. And these are the trade results. The problem is here is when we look at this equity curve, we can see we are in a big drawdown for almost 6-7 years. Now, from experience, when you see an equity curve like this, it's usually a direction filter that will fix this type of equity curve, because basically the market regime was in a certain type, and volatility market regime doesn't stay long enough. So usually it's a direction market regime. Now we can easily do this with a 200-day moving average. So we say only go long using whatever combinations of the SuperTrend indicator when the price is above the 200-day moving average. That works really well on the indexes. Of course, since we are using the trend filter, we can introduce another longer version of the SuperTrend indicator. So we have the short and let's say the medium term, and then the really, really long term. That will act just like a 200-day moving average. So I will show you both of them and how they will affect the strategy. So this is the equity curve of the two SuperTrend indicators. And now I will add the 200-day moving average, meaning we will only take the signal when both of them are green, both the SuperTrend indicators, and the price is above the 200-day moving average. So if we compile, and you see how we got rid of all that drawdown. And let's see the performance. And also we make more money. Our return to drawdown goes down a little bit. We were 5 point something. And like I told you, this is the advantage of having more trades, because you can easily add a filter. And even after the filter, we have 252 trades. 62%, and we are making about $1,200 on average. Now going back here, instead of the 200-day moving average, I will add a longer version of the SuperTrend. This time I'm going to use a 150 bars look back for the ATR. And let's see how that's gonna affect. So it looks almost the same. Let's see the performance. Even though we are making same money, our return to drawdown is not as good. Now, of course, I can fix the, let's say, long-term trend filter. So I can fix the SuperTrend at 150 and now re-optimize the short and the medium SuperTrend. There are many ways to go about this, but the idea is the same SuperTrend indicator can be used for everything as a filter and as an entry signal. In fact, I don't want to complicate things, but I can still use the same SuperTrend indicator as a stop loss or a profit target for this strategy. And it works really well because it's a kind of a breakout strategy. And if you use it as a trailing stop, it will protect a lot of your profits. And that's why this SuperTrend indicator is really, really versatile. If you like this video, then you will love the next one.